Normally, I trade two patterns, a bullish flag and a bearish flag. As simple and boring as they may seem, these two structures took me from being a broke 19-year-old to a profitable 20-year-old by far. But there lies a significant aspects on these structures that we are going to explore shortly. Please hit that subscribe button and let's get to it. Okay team, so today I would actually like us to have a look at the position that I've taken on GBP USD, which was the 4-hour structure. So what happened here is that I initiated my analysis on the 1-week time frame and then I executed on the 4-hour time frame. So I'm just gonna walk you through it, show you what I saw, where did I enter, where did I place my stop loss, and where is my profit. So without any further ado, let's get to it. So looking at this chart here, this is a 1-week time frame, as you can see. So being on the 1-week time frame, I needed to identify my 1-week high and also my 1-week low. Okay, so looking at this movement here, I will need to identify my levels around this region, which is around here, around this region here. I should not maybe go far and say this here is my 1-week low. This level is too far and it is actually irrelevant for this market movement, which is around here. So you should not go very far to identify your levels. So looking at this region here, I saw that okay, I am looking for the 1-week high and also the 1-week low. So looking at this movement here, let me just zoom in. I saw this high here as my 1-week high. Why not this high here? Because this high is not a valid high. It's not a valid high because I do not have more than 2 complete candlesticks after this high here, as you can see. So using this one here, I saw that okay, I do have this first complete and this second complete, so it made this high a valid high. So I'm just going to do this. This is my 1-week high, and then I needed to also find my 1-week low. So looking at this level here, this is my 1-week low, as you can see. So this is how I spotted my level. And then for someone who is maybe at a lower stages of this analysis, there is another way of precisely identifying your 1-week high and your 1-week low, be it 1-day high, 1-day low, or also 1-hour high, 1-hour low. You can do this. You can actually use this approach for any time frame to identify the high and also the low. So what you do is that you can actually switch to the line chart. Switching to the line chart, you are going to look for the recent 10s. Okay, so here can you see that here we had a 10 going where? To the downside, going to the downside. As you can see, we had a 10 here. So this says somewhere around here we are going to find our 1-week high. We also have what here? A 10. I'll just identify it as well. So our 1-week high is either here or it's either right here. And then moving on, can you see that here we also had a 10 going where? To the upside. So somewhere around here, it's where we are going to find our 1-week low. So our 1-week low is either here or somewhere around here, which is another 10. And then you just switch back to the bars, and then that's when you are going to identify your things precisely. So looking at this one here, let's actually start at the top. So I am going to just refine this, and then if I refine it, it goes to this high here, and then if I refine this, it goes to this high here. But then I chose to use this high here. Why? Because this high is not valid. So you can actually get rid of this one because it's not valid. We do not have enough candlesticks for us to analyze. And then this here will be your 1-week high, as you can see. And now moving on to the low, if I refine this first one, it comes around here, as you can see. So this is the current candlestick. I do not even have one complete candlestick, so this low here is not a valid low. And then if I look at this one and I refine it, it comes somewhere around here. But being around here, we also have a card here, so it needs to be around here. And then looking at it, I do have more than 2 complete candlesticks, so this is a valid low. So I'm just going to say this, and then this here is my low. So after you have identified your high and also your low on the 1-week time frame, I needed to go to the 1-day time frame to actually initiate with my analysis, and then go to the 4-hour time frame to complete my analysis. Before we continue, guys, I'd like to recommend a great broker for you, Exness. Exness is a broker that I and 800,000 plus traders use. Why? Exness is regulated, has 24/7 customer support, and it is PCI DSS certified. But there's more, guys. Exness has instant withdrawals. I normally receive my withdrawals in less than 5 minutes. The trades are executed faster to ensure accuracy. The spreads on gold are less. Okay, so Exness is the #1 leading broker when it comes to less spreads. And then you don't pay any fees for holding your trades overnight, and Exness has reliable platforms. Looking for the best broker, look no further than Exness, which allows you to backtest your strategy on their own terminal. So sharpen your strategy by clicking the link in the description and register on Exness. Let's get back to the episode. So here, going to the 1-day time frame, I saw these movements. So I'm just going to refine the high first, and then I'm going to refine my low secondly, so it becomes something like this. So now the question comes, where do I initiate with my analysis? I initiate with my analysis on the level which is on the right hand side. So look at the low and look at the high. Between these two, the level which is on the right hand side, it is my high. So I'm going to initiate my analysis from the high and then see what I find. So here I use this tool here to actually analyze. So what I saw is that from here the market came down to this low here and then went up to this high which is around here, and then it came down to this low here, breaking this low, breaking a low, pushing to the downside. It means that we are still in a downward impulse. It gave us this low here, it went up to this high here, and then it came down to this low here, breaking this low that we have here, meaning what? We are still in a downward impulse. So here the market actually broke this low which is around here, meaning that we are in a downward impulse. It broke this low which is around here, meaning that we are in a downward impulse. It gave us this last low which is around here, but then we do not have the low which failed to break this low to actually tell us that we are now having a correction. You will understand what I mean here. So here, analyzing from the high, we are still in a downward impulse because the market recently broke the low and it just gave us the lowest level. So there's nothing that we can do when we analyze from the high. So I'm just going to get rid of everything. So if I find nothing when I analyze from the level which is on the right hand side, I then venture to analyze from the level which is on the left hand side. But it is advisable that you start on the level which is on the right hand side because it is the most accurate one. So here I now started my analysis on the level which is on the left hand side, which is the low. So analyzing from the low, I saw that the market went up to this high here and then came down to this low here, went up to this high here, breaking this high, meaning what? We are in an upward impulse, and then it came down to this low here and then pushed up, giving me this high, breaking this high here, meaning what? We are still in an upward impulse. Came down to this low, went up to this high here, breaking this high here, meaning that we are still in an upward impulse. Then came down to a certain low here, then went up to this highest level, came down to this low here and then went up to this high, failing to break the highest level. Can you see here? Here we saw that the market has been breaking this high, meaning that we are in an upward impulse, and then it gave us this second high, meaning that we are still in an upward impulse because it also broke this second high, and then it broke this high which is around here, meaning what? We are still in an upward impulse, and then it broke this high which is around there, meaning that we are still in an upward impulse, and then it gave us the highest level, and then it failed to break the highest level somewhere around here. Failing to break the highest level means that we are now having what? A correction. So I'm just going to get rid of everything once more, and then here I have my two highs that are telling me that we are now having what? A correction. This here is my first high, and then this here is my second high. So having these two highs, I just need to connect these two highs. So I'm going to use a trend line, start my trend line on the highest level, and then drag it across so that it also touches the high which failed to break the highest level. So I'm going to get rid of this high. So this is the structure that I am having. So now that I have drew my first trend line connecting these two highs, I must look at the lowest level in between these two highs. So if I take this tool here from this high came down to this low, and then went up to this high. Can you see that here it is my lowest level? So this lowest level here, it's where I am going to be pasting my trend line. So what I do is that I copy this trend line and then I paste it on my lowest level, as you can see. So it becomes something like this. So now I have my first touch around here. As you can see, I have my first touch around there. This here, the level in between these two highs, is my second touch, and then I was waiting for my third touch. As you can see, this is what happened. So waiting for my third touch, I went to my execution time frame, where I also analyzed as well, because I also analyzed on the 4-hour and then I executed on the 4-hour. So I'm just going to refine everything here so that they look good, but then you saw how I analyzed. So having this here, I saw that okay, I was now expecting what, my third touch somewhere around here, but then before I receive a third touch, the market must cross the hook point first. So now, what is a hook point and how do we identify a hook point? So a hook point is actually a pullback. Okay, so you can identify your hook point or a pullback on your impulse, obviously. So here, let's have a look at the impulse. Can you see that from the impulse, the market pushed up and then gave us a pullback coming down here? This for me is a hook point, and then it pushed up and then came down to this low, which is around here. This for me is a hook point. So these are the two hook points that we actually need, because these ones here were actually invalidated, just like this one. As you can see, the market came to touch it around here, so I was no longer looking at it. So I had this hook point that I was looking at, which is this one, and then I had this hook point which I was looking at as well, which is this one around here. So seeing this hook point, I know I was expecting a dead touch, and then I saw the market pushing down, and then it crossed this hook point. Let me just label it. So it crossed this hook point here. As you can see, after crossing this hook point, it did not give me a dead touch on my lower trend line. Let me get rid of this one. It did not give me a dead touch on my lower trend line, and then decided to start pushing up. So this hook point was invalidated, but before that it was already invalidated. How was it invalidated? Have a look at it. It crossed the hook point and then closed above the hook point. This candlestick, can you see that there was a wick here which crossed the hook point and then closed above the hook point? So it was already invalidated before this candlestick. So I said this hook point is now invalidated, let me get rid of it. And then remember the other hook point that we had, it was this one here. This was the other hook point that we had, so I'm just going to label it as well. So having this hook point, I was now looking at it and expecting my dead touch below that hook point. So I waited for the market to cross that hook point, give me a dead touch, and then close above the hook point. Remember, the 4-hour is my execution. It means I execute when the 4-hour closes. So looking at here, the market came down, crossed my hook point only once, gave me a dead touch. After giving me a dead touch, it went up to close above the hook point. So right here, it's where I took my entry, as you can see. So upon taking my entry here, I needed to deal with my stop loss first. Before I work on the take profit, I work on my stop loss. So working on the stop loss, I normally place my stop loss below the previous hook point. Let's say maybe somewhere around here, I had a pullback, then my stop loss would be below that pullback. But then in this case, I did not have a pullback, so I just needed to place my stop loss wide enough to avoid any stop loss hands. Okay, so what I did here, I placed my stop loss on 464,230. So let me just take it there. Yes, somewhere around here. Now I'm just going to do this and have a 0 here. So my stop loss is currently around here, as you can see, and then now I needed to work on my take profit. My stop loss is around here because I do not have any previous hook point that I can place it below, so I decided to place it around here. And then for the take profit, I needed to measure my entire impulse, which is this one. This was the impulse, remember. So taking this measurement, placing it where from my dead touch actually, so from my dead touch to where it actually ends. So my take profit is actually up there, as you can see. So this is the entry that I am currently holding. Just gonna, okay, it's going to take some time, but then it is what it is. I'm just going to wait and then see what it gives, but then I'm going to break even when the 1-day candlestick impulses away from my entry. So hopefully I broke down the entire analysis accurately for you to understand. This analysis is actually simple and fast. It took long here because I was just breaking down everything, but then if you keep on practicing, you will just analyze in less than 2 minutes to get your entire structure. So it is what it is. Me, I'm signing out.